So thank you all very much for your patience. This is Chris Capre with SecondSkySforex.com. So welcome to a webinar on price action trading. And we're going to be recording this webinar, just to let you know. So even though we're recording it, please ask questions at any point in time. I want you to feel very comfortable with that. We may be going over some things that you are aware of, are not aware of, and so, whatever it is that we're going through and whatever it is that we're covering, feel free to ask questions at any point in time. Now, for those of you that have been coming to this for a while, you generally know the format that I've been teaching lately, but for those of you that are new, and we have a good crowd here, and so for those of you who are new, welcome. And I just want to introduce you to the format of how this class generally works. So, and before I do really get into this, as Money Magnet pointed out, and I apologize, I have some allergies right now. So we'll be frequently blowing my nose and muting the mic, as not to completely destroy the recording. So, for those of you that know, the way the format is basically this, is that we spend about the first 10 minutes of the class talking about a particular aspect of trading. And when I mean talking about a particular aspect of trading, I'm not talking about necessarily the systems, or this is how you buy and sell here, but I'm talking about the trading experience. The experience of the challenges, of some of the pitfalls that you would go through, of some of the things that you can do to accelerate your learning curve, to avoid making key and critical mistakes, how to develop the right habits and patterns and discipline. And that's what we spend the first 10 minutes on. And the reason why we do that is because of really two things. One, there's an overabundance of, and I don't mind, I think it's a good thing, but there's an excessive amount of material in terms of webinars which are solely focused on how to teach you how to buy and sell. Buy, sell here, stops, limits, and all that. There is so much material on here, and yet still 3 out of 4 of you are not making money. We have 85 people in here, so that means about 61 to 62 people in here are not making money. That's not very much in terms of who is and who is not. And if there is an overabundance of information out there, wow, that's interesting. Wasn't expecting that. If there is an overabundance of information in regards to the amount of systems and how to buy and sell and everything like that, yet 3 out of 4 people are still not making money, then it's really not a question of a lack of, the knowledge out there on how to buy and sell, how to make trading decisions. That's obviously not the problem. There's so much of that, you should be able to find something out there that allows you to be profitable. And yet, there isn't. The format. So, anyways, the way we do it is we spend the first 10 minutes really talking about an aspect of trading that is aside from systems, because there's so much information out there. Logically, if all that information was really all you needed, there would be a lot more successful traders. But there isn't. And there's a reason for that. The reason is that there are things outside of making a trading decision, buy and sell position, stop and limit, that have to do with trading. And so with that being said, we spend the first few minutes of the class talking about a very particular aspect of trading. And that doesn't have to do with the buy and sell aspect of it. And many people have found these to be very, very useful. And so, we're going to talk about a theme or something that comes up. Each week, something new or something in my life, whether it's in trading or not in trading, is always informing me about some aspect of trading. And so, because my life is so tuned around trading in the markets, that everything I do is kind of a feedback loop into that. And so because of that, it allows me, there's a lot of information that's being generated that, I share with these classes here to help you accelerate your learning curve beyond learning how to buy and sell. Again, if it was just that simple, everybody would be making money, or a lot more people would be making money. And so there's a reason for that. With that being said, I want to talk about preparation. By the way, Jay says, at present the screen it's gold on the 4-hour chart. That's it. Okay. So I want to talk about preparation. It's interesting. I've been reading a lot. I've been watching a lot of football, American football lately. And I've been doing a lot of studying and reading books of really successful coaches and successful players. And there's one thing I'm always finding in common about these professionals. And that is preparation. All of them spend hours and hours a week, every single day, just for one game a week. Just for one game, it's about 3 hours, and that's it. They spend their entire week training for 3 hours of their life, one day a week. And during that week, they're preparing. They're preparing for the big game. They're spending hours and hours going over drills, over practices, over formations. They're exercising their bodies to make sure that they're in shape, that they're physically strong. They're building strength while they're doing that. But the constant theme is preparation. They spend hours, more hours than people who are not professional football players, preparing for their games. And they do this week in, week out, and even when the season's over, they still spend time preparing for the next season. When it comes time for that Sunday game, even though they probably put in 40, 50, 60 plus hours, they still have that big game. They will get to the stadium anywhere from 2 to 3 hours before. Now, that 2 to 3 hours before is not like talking with the media and everything like that. It's not just putting on their uniform, which doesn't take that long. They are doing several things to get themselves ready for that big game. Even though they've already put in 40, 50, 60 hours throughout the week, they still, for a 3-hour game, are going to be there 2 hours early at a minimum. And what are they doing? They are stretching their body because they know they're going to be using their body. They are working on their breathing to make sure they have good respiration and breathing throughout the game so that their conditioning is on point. They are getting themselves ready mentally. They're doing some of the exercises that they're going to be doing exactly inside that game. And it's just constant. These guys are spending massive amounts of time preparing. Why? Because they know that the body and the mind can be trained to do something at a very high level. They've made it there, so they obviously can perform at a high level, but there's tons of people who make it to the pros and never really play that much. And yet there are ones that constantly do. And these people are training their body and mind to be something that maybe 1 out of 10 people, maybe 1 out of 10 people, or maybe even 2 out of 10 people will ever get to be, at best. They know that what they have is an opportunity in front of them, and they know that through practice and continual training and continual preparation that they're going to put themselves in the best position possible so that when that game happens, that 3 hours a game happens on that Sunday, they are as ready to go as possible. They're ready to give 110%. Now, Trading is a little bit different. Trading's different in a couple reasons. It's not a team sport. There is no other people around you. There's no coach to, force you to be at practice. There's no coach to force you to do any drills. There's no coach to force you any training. There's no contract unless you're working for a bank or a broker for a trading team. There's no contract that you have to be there at a certain time or that you have to do a certain amount of things or that you have to study or prepare anything. It's all you. It's all you being left alone to make all the decisions of how everything is going to turn out. And maybe you have fantastic discipline on your own. Maybe you have spent a lot of your life training, maybe in sports, maybe in martial arts, maybe in the military, maybe a high level, office executive or, in your field or whatever it is. Maybe you've had years and years of training. So this habit of being disciplined and being prepared is always there. But it's very possible that that's not there, that you just haven't had those life experiences for whatever reason. And so here you are now sitting at home or in an office in front of a computer, left to your own devices to trade and make money with your mind, to make money with your own discipline, to make money with your own preparation. And many people will not do all the things that are necessary. Many people will not do all the preparation or do all the training. You're here in this class, so that's a good step. And whether it's my class or somebody else's class, you're here in that class, and if you're really paying attention and you're really participating and not talking about Berlusconi's winning the vote or anything like that, but you're actually paying attention to what's happening right now, and you're really focused on that, then you're going to get the maximum out of this class. And so, with that being said, you're saying, hey, I want to be a trader. Whether it's a part-time, whether it's full-time, whether it's professional, whether it's semi-professional, it doesn't matter. You're asking to be something that 3 out of 4 people will not be. You're asking to be profitable. And globally, 3 out of 4 people that are trading are not making money. And so you're saying, hey, I want to be that person. The thing about it is that if you really think that all you need to do is just when the market opens or it's time for you to start trading, you sit down at your chair in front of your computer and you start pushing buttons, you're going to be in for an uncomfortable and likely unsuccessful experience. You're actually going to be in for a common experience, that same common experience that 3 out of 4 people are having. Look at this list. We have 95 people in this class. So what, 72? 72 out of this 95 that are here right now are not making money. And by asking and saying, hey, I want to be successful at trading, you're saying I want to be successful at something that very few people get to be successful at. But you have to ask yourself, do you really think you could be successful at something that 3 out of 4 people are not without preparing yourself? And I don't mean studying and prepping your system. I mean getting your body ready for the day, getting your mind ready for the day, getting your central nervous system ready for the day, because the one tool that you're going to be using when you are trading is your mind. This is the one thing you're going to be using the most. You're not using your body. Your body is really just keeping you sitting in a chair for most of the time. And that's it. In fact, if you want to know how much you're not using your body, sit in front of your computer for 10, 12 hours a day and let's see if you actually stay in shape. Probably not going to happen. So, with that being said, you're using your mind. This is the most important tool you're using. You're making all your decisions with it. You are using it to be aware of what's going on in the market, what opportunities are coming up, what patterns are coming up. You're also using it to be aware of any potential pitfalls. Are any emotions creeping into your trading to where they're causing you to maybe make a decision that's not part of your system or your money management? And so you're doing a lot with your mind. And therefore, since this is the one tool that you're going to be using, if you want to be a professional at this, you're going to have to spend time training your mind. You're going to have to spend time preparing your mind. Not just the day of you're going to be trading, but also the days that you're not trading. And so, with that being said, ask yourself right now, what do you do to train your mind? What do you do to prepare yourself mentally? Do you just show up for your trading day by waking up, getting out of bed, and looking at the market? Because if you do, that's not going to get yourself ready, both physically and mentally. It actually takes time for your central nervous system to wake up and be operating at a more optimal state. You don't just wake up and are automatically operating at an optimal state, or even your brainwaves aren't even at that point. Do you actually have the proper nourishment, food, drink, fluids? Have you showered? Or do you come in, smelly, sweaty, looking unkempt? I guarantee nobody's going to show up for a professional football game unprepared for that game. They get paid immense amount of money because they have, for years and years and years, showed up ready for whatever the task and the games were in front of them. And so, ask yourself, how much do you really prepare for the game? K's theory says shower, stretch, 200 mental arithmetic questions, and coffee. Good. That's a pretty good routine. That's pretty solid. The part that I would probably say is the weak link of that is the coffee. If you really knew what kind of, I'm not going to say coffee is bad for you, and I definitely don't want to step on anybody's habits. I know people's addictions can be quite strong. But if you really understood what coffee does to your brain, you probably would take less of it in preparing yourself. But showering, fantastic. Really wakes up your central nervous system, stimulates all the nerves, particularly the ends of the nerves and everything like that, and your muscles and your skin. Stretching is fantastic. It can not only help your body be relaxed while you're sitting, but it can also slow down your breathing, which is good for having a calm mind, great for emotions. Amos says yoga, fantastic. And so, 200 mental arithmetic questions, all fantastic. Training your mind, absolutely fantastic. It's a very good routine. Spirit says, I drink 5 to 6 every day. You know what, Spirit? I'm not surprised about you. That does not surprise me. So, so ask yourself, how much are you preparing yourself every single day? Again, the professional football player will be at the football field and start preparing 2 hours before for a 3-hour game. And ask yourself, how much of that time are you training your mind for actually today's exercises? And ask yourself, when you're not actually going to be trading, how much are you training your mind? How much are you preparing? Markets? Are you doing patterns? Are you going into a brain gym and training your mind to build up better pattern recognition? So, with that being said, ask yourself what it is that you do to prepare yourself not just for the trading day, but also when you're not trading. Because to be a professional at anything, to be a high-level professional archer, professional, football player, professional trader, you have to work not just hard at being prepared for the tasks that you're going to do, but you have to work overtime. You have to work really hard to be successful at what you do, because you're going to have to perform at a high level. And that's going to require a lot of your resources and a lot of your energy and a lot of your skill sets. And those are finely tuned things that get there through training. And so that's something that, really came up for me this week. I wrote a really good article on this, which I'll give you a link to at the end of this class, which talks about it, gives a daily morning routine of what I do every single day and some things that you can do as well. And so, with that being said, that's my thoughts on preparation. Now I want to get into this brief question here, and then I want to get into the market and talk about what it is that I've been seeing in the markets, what I've been trading, how I've been trading it from a price action perspective, and how you can use these same techniques. But before I do, in regards to what I said about preparation, does that make sense? Does that seem like something that you could be working on? Do you all feel like, does every single person here, there's 97 people in here, does every single person here feel like, yeah, I am totally prepared for every single day, or I need to work on preparation? Maybe I focus too much time on just learning a system or something like that. Does everybody, is everybody seeing something from that, finding some benefit from that? Venus says yes. Wikipip says I definitely need some more prep time. Good. Yeah, and Jen brings up a very interesting point. Only trade when you have focus and that your mind is really ready for it. If your emotions are off for that day, you might be able to make your way through it if you are already a successful trader and you have years and years and years of being a successful trader. Maybe you have years and years and years of doing it, so you have such a large skill set and so much training in it that you can get by. Kind of like maybe you're a really good golfer and maybe you're just having a bad day, but you can still hit the golf ball pretty good. That may be the case. But if you're not that case, if you're not at that level, and you're coming to the trading, emotionally off, psychologically off, unfocused, there's something going on. I mean, life happens. There's things in life that are going to affect your work and your profession and your trading. If you feel like you are in that moment, walk away. It's far better to, when you're going to be sitting down at the trading computer, to give you the best effort you possibly can than to give a half effort and possibly lose a bunch of money over some silly mistake or your emotions are too much getting the best of you, or whatever. And, so with that being said, you also got to consider you're going up against computers many times that don't have any emotions, that don't get tired, that don't have problems, executing things. They're going to do things faster than you will. So they have a natural edge against you. So you need to make sure that when you are trading, you are 110%. Otherwise, it's just going to be that much more difficult. So, that's an interesting point there. Michael had a question. Preparation for someone trading the 4-hour charts will be different for someone on the 15 minutes. Actually, very little difference, Mike. Very, very little difference. I'm going to disagree with you on this here, really. That, I know dozens of professional traders. I know former bank traders. I know institutional traders. I know current bank traders. I know a lot of high-level traders. And they're all trading on different time frames. And they all have relatively a similar preparation thing. They all have a similar training regime. Some have a couple different quirks here and there that are different. But it doesn't matter whether you're trading on the 15 minutes or the 4-hour time frames. Yeah, you might have to make a few subtle adjustments because of the 15-minute time frame. But I guarantee you that if I'm trading on the 15 minutes or I'm trading on the 4-hour time frames, my preparation is still the same. The only difference is maybe I need to train in speed exercises a little bit more, train my mind to be able to process information a little bit faster. But other than that, you're still doing the same things. You still have proper risk management. You still have pattern recognition skills. You're still making trading decisions, analyzing risk. These are all the same things. You're just having to do it faster. So it's the same task, just faster. So, and overall, I'm going to disagree with that. Your preparation is relatively going to be the same. It's just a few subtle adjustments. So, that's my thoughts on that. Sujivan says, may I ask what you do for prepping? I'll give a brief description of this. I want to answer these last few questions here, and then I'd like to get into the trade setup for today from a price action perspective. This is what I do every single day. Whether I am trading or not, this is how I get up and start my day. I literally wake up, and the first thing I do, other than turn on the computer to make sure that all hell hasn't broken loose, and the world's not falling. It rarely is, but I do it anyway. So I just turn it on, take 5 minutes to look at things, and then what I literally do is I take a shower, clean myself, I get my body ready, I get clean, I get energized, and then after that, I actually spend the next hour and a half to 2 hours every single morning, whether it's Monday or Sunday, doing yoga and meditation every single day. Because I know that if I do that every single day, not only will my body, but my mind will be highly energetic. So every single decision I make that day comes from a highly energetic, relaxed, and clear place. That is what I do every single day, whether I have trading that day or I do not. No matter what, without fail, holidays or not, birthday or not, went out, playing poker the night before or not. Harley says, what time do you rise for trading days? I rise actually at the same time every single day, 6 a.m. So that is what I do every single day, whether I'm trading or not. Now, 5 days a week, I actually train in what is called a brain gym, which is, and I mentioned it before, it's called Lumosity.com. It's from Lumos Labs. And they have exercises that you can do to train your mind in memory, attention, problem solving, pattern recognition skills, all of these things here. The thing is, when you're training your mind, you can't just train your mind necessarily in one thing. For example, you may do Sudoku puzzles or something like that, or you may play, one particular game. But the thing about it is that one particular game will only train one portion of your mind, and because your mind and your brain is so interconnected, that you're not going to get that great of a development. And so, to really develop your mind, you need to be training it in all the major aspects that are going to be common functions in every single day. And by doing that, you are going to be developing all aspects of your brain, particularly the ones that are needed for training, which is called pattern recognition. And to have pattern recognition, you need to have really two skill sets and two things that are developed in your brain. You need to have attention, and you need to have good long-term memory. All of those things can be developed. Whether you have them now or not, all of those things need to be developed. And so, with that being said, your brain has a neuroplasticity to it. It has a certain ability to adapt and change and evolve over time. And so, with that being said, I work on all those things every single day. 5 days a week I go to a brain gym, and I spend anywhere from a half hour to an hour, hour and a half actually reprogramming my mind, reprogramming the neuropathology, reprogramming the connections so that I have a stronger, sharper, more clear, more ready brain to pick up patterns and have better attention, which are two things that your mind needs when trading markets. So that's what I generally do every single day. Also, several days a week, I shoot archery. And that is really an awareness. Yeah, it's a physical thing, but that's really about building awareness, concentration, and focus. And tell me which one of those things is not useful for your trading. And it's not just developing those skills, it's such a precision sport. It's such a precision activity that you're going to develop a very subtle fine-tune awareness as you really develop in your archery practice. So hopefully that gives you an idea of how I prep. Okay, last few comments, and then I'm really trying to get into this trade. So Andreas says, Chris, everything you're saying is exactly what I tell myself every day, and yet there are some occasions where I just can't seem to listen to myself. It's as if I just go against everything I spend a long time working on. This is a very good comment, and it's probably an experience that a lot of people have, Andreas. So don't feel alone in this. Discipline takes time. It's kind of like building a strong bicep. If you don't have a strong bicep, that doesn't mean you're forever doomed to not have a strong bicep. If you really learn to lift weights, particular exercise your bicep, eventually your bicep's going to get strong. So, some things you can do is, have a trading journal and really mark the days, or on a calendar mark the days that you do all these things to prepare yourself every single day. And, there are also things you can do in your life by reorienting your activities in your schedule so that the things that you are participating in helps build discipline, helps build focus, and that the things you are not participating, or that you choose not to participate in, don't age your life. Watching 6-8 hours of TV generally is not going to help develop your mind. In fact, neuroscientists have done studies that watching TV for the most part has about as much neurostimulation as twiddling your thumb. So, there's certain things you could be doing that could be training yourself that in your life that could be helping to build a stronger mind, more prepared, or more disciplined than not. And so, take it step by step. Maybe it's something that you need to join, like a club, and maybe you join an archery club or something like that, and have somebody, really hammer you and be a coach and talk with you constantly and make you be there, something you have to show up. That might be it. That might be something that'd be useful. But, Andreas, don't feel like it's something that you're fated to do. The fact that there are some occasions where you are doing it is very good. That means you're working at it. Trading is a process. You don't just go from A to Z without all the letters in between. Yeah, maybe you can skip certain things, but that's only if you really have a really, developed skill in certain areas that you can pass those letters up. So, it's like anything. It's just something you build step by step. And so keep working at it. That would be my recommendation. Harley, I've answered your question. Fernando says, Chris, do you take vacations? Do you switch off mentally from the market during weekends? Yes and no. Yes and no. This is what I do for a living, and so my whole life orients around this. I all the time I spend in the brain gyms is really for two reasons. One, to make myself a sharper trader, and two, having a sharper brain in life is very useful. It's a very useful tool to train. So, I guess I'm very fortunate because I'm a highly focused individual. In fact, you'll probably notice that people that are really successful, whatever field they do, are really highly focused individuals. They spend very little time doing things that are not supportive of their growth in their field, and they spend most of their time really building their skill sets. If you really look at people who made history, these were incredibly highly focused, highly productive people. Tchaikovsky used to have something on his door that would say, I think it was like available appointments from 3 to 5 p.m. Mondays and Tuesdays. And that was it. All the other days he was just practicing. He was just, working on music. So I spend a good portion of my time being very focused with what I'm doing. But in terms of switching off mentally from the markets during weekends or other days, if I'm not training in archery, yoga, or meditation, or all these things, when I'm doing something else, I'm doing something else. That is switching off mentally. When I'm out at the beach, I'm out at the beach. When I'm in the shower, I'm in the shower. And so meditation has trained my mind to be very focused on what I'm doing in that moment. So I don't need to switch off mentally because I already having that time when I'm doing something else. So, yeah, I take vacations. Yeah, I do definitely take time away from the markets. But, I feel energized from the time that I put in the markets. I never feel unenergized from it. And yet, when I'm away doing something else or I'm with my friends, that's where I'm at. So I don't need to switch off because I'm just, I'm constantly working on being present with what I'm doing. In fact, once you learn how to train your mind to be constantly focused and present on what you're doing, you'll find that you never need to switch off, because when you are relaxing, you are really relaxing. You're not lying on the couch while thinking of all of the things you have to do tomorrow. That's not relaxing. Who's going to get more benefit from the relaxing? The person whose mind is just completely free and relaxed, or the person who's lying on the couch and then thinking about all the things they have to do for that day? So, person A and person B may have the exact same amount of time switching off, but who's really switching off? So hopefully that answers your question. Okay, with that being said, I want to get into today's trade session. Or today's trade, price action trades. Hopefully we've covered a lot about that. Chano says, what about women in trading? Women can trade too. There's a lot of really highly successful women. So hopefully that answers your question. Okay. With that being said, one of the things that's really attracted my attention lately has been gold and silver. If you all remember recently, as far back as late September, gold and silver took a massive dot. They were both very, very strong. And yes, we'll finish in time mod, no problem. Gold and silver were very, very strong. They were the darlings of the investment world, particularly gold. Everybody was loving gold. It was great to be gold. There's gold commercials, there's gold everything out there. And gold was making all-time highs. And then all of a sudden, CME hikes margin a couple times, and then, gold and silver take massive dives. Now, if after running into kind of a big calamity like that, if that particular instrument or investment is a bad investment and really didn't have anything underlying to support it, then usually when it gets hammered, it will continue to get hammered for a long period of time. It doesn't recover that well. I mean, look at bank stocks. Bank stocks have not really recovered at all. Citibank is way down from its lows. Bank of America is way down from its lows. Or it's way down from its most recent highs, after the rebound from 2008. And so if an underlying instrument really doesn't have much supporting it, then the rebound will take time, and usually that particular sell-off or, that particular move continues for a long period of time. However, if the underlying instrument has a lot of good people, a lot of good reasons to be buying it still, people still have interest in it, people still want to be buying it, well then the sell-off will usually be very rapid and quick, and then after that it will run into some level where people say, hey, this is sold off plenty, we like it here now, we're going to buy it again. Not, oh, it's super cheap, this thing has gotten destroyed, it's going to eventually turn around. No, it's, hey, we liked gold at 1900, maybe we still own gold, now gold's at 1550, and we're going to buy it again because we think gold's going way above 1900. And that's what we saw in gold. That's what we saw in silver. They sold off really, really violently, really fast, and then they ran into gold ran to 1550, and it hasn't seen it since. Now, this is a golden rule in price action. It's not just a rule in price action, it's across all markets. Bottoms take longer to form than tops. Bottoms take a long time to form. And that, if the sell-off was a couple days, the bottom could take anywhere from weeks to months. If the sell-off was, days to weeks, the bottom could take several months at a time. And so bottoms generally take some time. And what we saw on gold and silver was that after the rapid sell-off, we saw a very long bottoming formation. We saw several attempts after 1550 and the massive buy-up of that. I mean, it went from 1550 in a period of a day up to almost 1700. so it went up almost $175 or $150 in a very short period of time, we saw several higher lows take place, all indicating that this market was attempting to form a bottom. We have the first original bottom there, then we have a higher bottom here, then we have some higher bottoms here, we have some higher bottoms here. So we see that the market was attempting to form and stabilize after that. Oops, I don't know why I did that, apologies. We see that the market was really attempting to stabilize for a long period of time. When this sell-off first happened, it hit that low back on September 26th. It took all the way until almost a month later, October 20th, before it put in its last final higher low and started a nice up run. So it took about a month to really form this bottoming formation where it was stuck between 1600 and 1700. But then on this last higher low, which was the highest of all of them, it went on an impressive run. And that was really communicating, and we've been writing about this on our blog for a long time, that gold is probably going to continue to seek higher ground. In fact, if we look at this, this is a very impulsive run. Look how many blue candles there are in this particular run. You know, we can find 1, 2, 3, 4, 5, 6, 7 red candles from October 20th all the way to October 27th. So a period of 7 days, we can only find 1, 2, 3, 4, 5, 6, 7 red candles. That's not many. 28 hours. I keep doing that. That's not many at all. And so that tells us that the market got very long, predominantly long, and it did it in a very aggressive fashion. Now, after hitting 1750, the market had one really aggressive sell candle where it dropped from 1750 to 1710 in 4 hours, which is pretty aggressive. Now, after hitting such an aggressive candle, you would think actually that the selling would continue in very constant form and that we would also continue to see several big candles. But we didn't. So what does that communicate to you? It communicates that after a really good punch, after a very hard hit, that it was only able to follow up with jabs. The bears were only able to follow up with some jabs at that point, and they weren't even that powerful. They weren't even actually able to take advantage of that and really make that much more damage to the upside. After hitting a low of 1680, the market bounced very aggressively in a period of 8 hours, went from 1680 to 1720. It opened, went down. Some buyers came into the market. They said, this isn't going any further. We're going to reject it here. We don't accept price at this level. We're going to push it back here very aggressively. And then how does it open up the next candle? It opens up, goes a little bit lower, and then closes towards the high, communicating that the rejection off this low was very, very strong. And it was followed up with aggressive buying the next day, or the next candle. What happened since then? The market kind of peters around a similar level, pulls back to the 20 MA, and then after that, after using the 20 MA as support, it has some very aggressive buying to break out of this critical high. Now, what's interesting about this critical high that had rejected price before is if we zoom out just a little bit or go back, we can actually see right here that when the market was selling off, it pulled right back to the 1750 a couple times and then sold off very aggressively then. So a key pullback level on the sell, on the downtrend when it was aggressively selling off, now became resistance on the uptrend. And instead of selling off aggressively after that, the market said, we're going to buy this on dips and we're going to break above it. So what does this possibly trigger? What system did we talk about last Friday that is generally a great setup for trading these types of price action environments? Michael says retest. Exactly. Breakout retest. We had something that was resistance on a pullback level on a major sell-off. Then while it was being bought up was also resistance again, but then we bust through it, and we bust through it. Remember that one thing we talked about that was generally a good sign of that? Was that we bust through with aggressive price action, and we did so here with a very strong candle, communicating either A, from an order flow perspective, the bulls came in with massive force, or B, they were coming in with the same force as they were before, but the sellers just evaporated out of the market. So either the sellers just put up the white flags, or the sellers were there in the same force, but the bulls came in with a stronger punch. Either case, from an order flow perspective, the markets took this out with a very aggressive fashion, communicating the real strength of this breakout. And so this sets up a perfect breakout retest, or as Gabriel said, role reversal. And so with that being said, this was a very easy setup. I've owned physical silver, and so because I own physical silver, I'm also in some sense very partially long gold at the same time, because they really tend to go hand in hand. So, as gold goes up, I'm really rooting for it because that'll just make my silver better, in the long run. So, I've been bullish on gold for a little bit now, and now that it's broken out of it, this was not that difficult a trade to make. We've broken out of it, so let's set the trade exactly where the prior resistance level was. Let's look for a retest, and then we'll go long on this one here. Now, I'm going to be honest. I didn't catch this candle right here. I didn't actually get the first candle right there. I actually saw this, and I was busy with a couple other things, and I said, shoot, maybe I missed it. Okay, well, you know what? I'm going to wait for my price. 1750 is the level. I'm going to wait for a retest of this level. And guess what happened? About a day and a half later, I got it. So that was my setup. Not very complicated. I'm going to tell you my stop. I'm going to tell you my limit. And then we'll see how the trade worked out. Very simple stop on this one. If 1750 is the breakout pullback level, well, then I want to put my stop below it. And I said, well, what can I use as a buffer? A little bit more of a buffer. I said, well, the 20 EMA is there, so I'll just use that as a little buffer here. And I saw a couple wicks here, and I said, fantastic. I'll have a $10 stop on this one here. And my target, now this is the tricky one. What am I going to look at my target? I said, you know what? Let's go back. And I said, you know what? I kind of like 1800. I actually still haven't hit my target yet. I said, I think 1800 is a good level. It's a round number. It's got a lot of happiness in between here and there. So there really isn't any one particular level that looks that much more special than the other. 1850 was an option. So was 1825. But I said, they're around the big figure. This may get rejected on it. So I literally set mine at 17.99, and I missed it by $1.50. If I were to put this right on 17.99, I put it $1 before at 17.99. I can't get exactly in there, but I missed it by about $1.10. So I'm technically still in this trade. But as you can see, look what happened when we did the breakout retest. Look at how the market responded. It broke out, tested it once, immediately. It got rejected. Buyers obviously felt that that was a big level with money. They put in their own money in there, say, hey, we accept this now as a role reversal. We no longer consider resistance. We consider support. And guess what? 27, 30 hours later, we retested the exact same level again. So there we go. And look what happened after that. The market bought it up very aggressively and very consistently, communicating, hey, this is a legitimate level. We're going to continue the uptrend. We only had one 4-hour selling candle out of 7. So I had literally a $49 target, $10 stop. It's almost 5-to-1 R to R there. Not too hard to find these 4 and 5-to-1 R to Rs. Where is my stop right now? This is an excellent question. Well, first of all, let me see if there's any previous question. Michael says, how do you judge when to wait for retest and when breakout is strong to RTN? Ali says, also, doesn't it look like an inverse head and shoulders? This is something that for some reason, people get confused on. Head and shoulders patterns are reversal patterns, and inverse head and shoulders by default, only happens in downtrends. It doesn't happen in uptrends. So I don't even consider head and shoulders patterns and inverse head and shoulders at the top of an uptrend. I only consider something to be a legitimate head and shoulders pattern if it's at the top of an uptrend, or a legitimate inverse head and shoulders if it's at the bottom of a downtrend. For some reason people want to call inverse head and shoulders at the top of uptrends. It's silly. It's a reversal signal. From what? A trend. What kind of trend? A downtrend. So, okay, so hopefully I answered your question. Gabriel says, why would it be better to buy at the reversal of 1750 instead of at the first breakout at the same level? Because the retest gives me more confirmation. It gives me more confirmation from an order flow and money perspective that the market is saying, hey, not only do we consider this a legitimate breakout, but when we retest this level, not only new buyers are going to come in, but the same buyers that feel confident about it are also going to buy it. So it's more order flow confirming the trade. So hopefully I answer your question. Now, in terms of Amos says, how did I set my stop loss? Well, the theory was this. If 1750 is the reason why I got in it, then my stop needs to be below it. I didn't want a huge stop. Generally, the 20 EMA supports things in uptrends. I had a couple wicks over here. I had some price action over here. So I said, hey, this is where I'm getting in. Let's set it just below this. We use them both as support, and that was it. Very simple. Fernando says, where's my stop now? Great question. Normally, I don't like to move my stop. If I have a one target and one stop, I normally like it to be I either hit my target or hit my stop, and that's it. But because this thing has been in play now for about roughly 2 days, this opened up on the 6th of November. Because this has been in play for 2 days and the 20 EMA has been trailing, I have been trailing my stop below the 20 EMA in this one here. So literally I have it now at 1770. I've locked in some profit on this one here. And so we're pretty darn close at this point. I feel pretty confident we're going to get there. If not, no big deal. I still, even if it just closes out at 1770, I still have a 2-to-1 R-to-R on this one here. So I'm not disturbing any of the R-to-R ratios. Rob says, are you trading gold in the Forex or futures? I'm trading spot gold. So it's CFD. Quick question. Wicked Pip says, if you're so close to your target, why not close it? I would, as I'm chicken. Why? Because that will mathematically work against me over a long period of time. Let's say that I have 100 trades that were winners, and my target was 100 pips, and I had a 50 pip stop, and I'm 50% accurate. Well, mathematically, I have a very winning formula. But if every time those 50 winners, I decide to close them, say 10% early or 12% early, that's 12% over my bottom line that over a very long period of time will work against my mathematical ratios. If I only have a 2-to-1 R-to-R and I'm shaving off 10%, think about mathematically over 100, over 1,000, over 10,000 trades, how much that shaves off my bottom line. And if I go into a losing period, of a couple days or a week, think of how much that affects me then. The only reason why you're thinking that, Wicked Pips, is because you don't have a very long trading history. But if you really understood the mathematics of it, you would not shave off that much and you just let it run. Plus, it's also a question of discipline. You got to learn to be disciplined in these things. And it's one of the most critical things. Every time you do something that counteracts discipline, you're undercutting your trading process. So hopefully that's your question. I'll give the link in just a second here. Michael says, do you need a bullish candle? Michael says, do you need a bullish candle on the retest or just a touch? Great question. No, I don't need a bullish candle on the retest. I don't. I just need a retest. That's it. Jan says, so when do you buy at the bounce? So the first green-blue candle or take out the previous candle's high? I generally like to see one touch on it. Sometimes I'll take the first retouch, but generally I often like to see already a previous touch on it. Because I had missed this candle right here, I really didn't have an option. I had to take the second touch. So I generally like to see, at least one touch though, and sometimes I like to see the price action for a little bit to see, is it saying, hey, we're going to slam right back down, or is it saying, hey, sellers aren't taking over? Many times when it's break out, they're going to retest. So hopefully answers your question. With that being said, I'm going to give you guys a link in just a second. I'm going to wrap it up. But does everybody see how and why I made that trade from a price action perspective? Does everybody see the mechanics of what I was seeing in the market, all the things that I analyzed, all the things that I talk about? Does everybody see that? Does it make sense why I saw that and how I was able to pick out those things? You know, I want to keep deconstructing the market because I think if I do this long enough, eventually you'll be able to pick up some of these same patterns and tools. And then eventually you'll start spotting that. So, JJ says, I've waited in many trades to enter the retest, but most times no retest happens and I miss the trade. You know, first off, Jay, you're going to miss some. Second of all, I show a lot of breakouts, and all the breakouts, almost every single breakout offers a retest. In fact, I'd probably say it's 60-70%. If you're trading on smaller time frames, you're probably going to have less retests, but because they don't mean that much. You know, there wasn't that much history and visibility and money spent at that level that really made that a significant level. But on a 4-hour or daily time frame, that means there was a lot of time, a lot of tick counts, there was a lot of price action at that level and order flow at that level that historically, and it had history, it had visibility, and it had a lot of time behind that. So on smaller time frames, that will happen less. On 4 hours and daily time frames, it will happen a lot more, just because it has a larger history and visibility. So hopefully answers your question. Fernandez says, on this trade, do you not consider switching to daily, looking for a higher target? No. All my analysis, everything I did was on the 4 hour, so I'm going to stick with that. That's where I got my trade trigger. That's where I got my signal, so I'm going to stick with that. I'm not going to look for anything else on any other time frame. So, hopefully I answered your question. Does that make sense, though, Jay? Yes, no? Maybe, I don't know, maybe Jay's gone. Okay, well, with that being said, I have a special announcement, which is that I offered a discount for those of you that are on my newsletter last week, and the discount was so popular, so many people really liked it, so they really scooped it up. And with that being said, I felt a little awkward offering it 2 weeks in a row through my newsletter, which goes out to a large list of people. But I did think, you know what, I've been teaching at FX Street for a long time, and there's a lot of people that come back to these classes again and again and again. And so I thought, you know what, I'm going to offer this one just to FX Street only. I'm not writing about it. I'm not even offering it to anybody on my list, just to the 100 people that are in here only. Anybody that's interested in any of the courses till this Friday, you can get $60 off the course, and that's it. It was a super popular discount. Many people took advantage of it, and they're very glad that they did. So with that being said, any questions, check us out at secondskiesforce.com and what we offer. Any specific questions about what we do, email me, info@secondskies.com. But make sure to read that article, the preparation in Forex trading. And so with that being said, I want to bid you all adieu. I'm back on my normal schedule, so I'll be here next week, Tuesday, same bat time, same bat channel. So thank you all very much for coming. I wish you guys good luck trading this week, good price action trading this week, and then look forward to hearing from you. Take care, everyone.